Thank you. Now let's look at it from where we stop. The one we worked on last class, we discussed the bin card, how it looked like. We applied the use of that bin card on how to get our closing inventory using FIFO method. That's first in, first out. Can we still recollect? Hello?
Yes, sir. Yes, sir.
Okay. Now looking at it from that end, we can pick it up from there to sort the necessary things out. Can we see the screen now?
Yes, sir.
Okay. It seems what we did that day was question number 2.
Sir.
Abi?
So question
Yes,
number
sir.
3.
Was it 3 or 2?
Question number 3, sorry. Have you? Just question number 3.
Question
Yes,
number
number 3,
Okay.
sir.
Okay,
Yes, sir.
question number 3. Okay. Now we've discussed the first in, first out. Let's look at simple average. We'll also look at weighted average, and at the same time, we also look at what? Last in, first out, which is LIFO. That's the last one we are going to do. And I plan to end there to make sure I solve all those evaluations possibly today to make us to be on the same page. And we can be able to look into the other areas. Okay. Now, first in, first out. How does this ones look like? Under the first in, first out, you are meant to be, we have done that. What we are looking at is a simple average method. For the simple average method, it simply means what? Simple pricing average method. Simple average pricing method. In that situation, you are meant to be adding the price, your new price together, divided by the number of the price. I don't know whether you understand what I'm talking about now. Now, taking for instance, your first price is 2 naira. If you don't buy any other one that the price that end up you having the changing in price, you continue using that price. That is your average price. But immediately you're having another new price. Taking for instance, you have 3 naira. Formerly you're having 2 naira. The new price is set to be 3 naira. You will add the two together, going to give you 5 divided by 2. That's going to be 2.5. 2.5 will now be the price you are going to be taking your boost out. I'm not saying selling price, but the cost price that you are going to take to be using to bring out your boost will be the average price. We also, another name for that price, we call it what? Moving averages. Moving averages. Is it clear? Moving averages. They can call it moving averages. Is it clear? Now, let's go to the Excel part. You can understand it better, what I'm talking about. Are you with me?
Yes, sir.
Hello? Okay. Now, what I'm trying to say is this. I think you can see the board. Can you see the board?
Yes, sir.
Now, when we talk of simple average method, it simply means average pricing. average pricing method. Another name for it, we also call it what? Moving averages. How do we go about it? Taking, for instance, you have P1, which is your price 1. We now say plus price 2. Are you with me? Divided by 2. Divided by 2. If you have 3 prices, you move down again. You have P1 plus P2 plus P3. That one will also now be divided by divided by 3. Is it clear? That is what we refer to as moving average. As you're having new price, you will be adding one, and that price will be changing. Is it clear?
Yes, sir.
Hello?
Yes, sir.
But,
It is, sir.
but the method is not part of the new standard anymore. But I will still lecture it. You can see it at times, it tests your ability on that. But it won't be new to you. Now, let's go to that question now. Are we good to go?
Sir.
Yes, sir.
Hello, sir.
I'm with you.
Okay. So now, I was reading a material. I was going through a material on this simple average method. So, I learned that in cases where we have three different prices like this one, that we are to ignore the first one and then work on the second one and third one and divide by 2. So now my
Yes.
question is, so can we also do that?
Yes, now.
Okay.
You get the same answer if you do it that way too.
Okay.
Now, we are now on the Excel page. We are still on question number 3. The first one we did had to be what? Question 1. We've done that. We use the bin card. Question number 3. We've done that. Where we use what? People. Question 3, I will indicate in the case you want to, for your study purpose. This one is what? People method. Now, the one we are looking at now is what? Simple average. Is that clear? Now, we are now on the new page. Now, the same format we use is what we are using today again. It's not changing. Is that clear?
Yes, sir.
Working note. Question number 3 again. But what we are using today is what? Simple average pricing method. Can you say it?
Simple average pricing method.
Simple average pricing method. Now, this is our working note on that. To simplify it, I'll be using NWN for simple average pricing method. Now, the first thing we are going to do is to sort out the working note, the way we did it the last time. I've copied everything. I'm putting it here. But I'm changing the title. Hope you can see the working, you can see the note, you can see the board.
Yes, sir.
Now, this
Yes,
one is
sir.
not people anymore, but we are using simple average pricing method. I will clean all the you can see that we don't have anything there anymore.
Yes, sir.
It's a plain sheet now. Now we now pick from that end what we have. The question again, we look at it in another way around. Now let's go for the question now. Let's go and copy the question. Question number 3, is that not so?
Yes, sir.
Okay, I've copied it. I'm pasting it now. Okay, do you know what to do? I want this thing to disturb what we are doing. Okay. Now, let's copy the question. I don't know why the system is fluctuating. I'm coming. Excuse me. I will open it again. The screen has stopped. Yes, I know. I'm coming. I'm trying to sort out some. I've opened many things and it's having effect on what I'm doing. Okay. I'm coming up with to make it more easier for. Let's read it from your hand. Can you open the question from your phone? Hello?
Yes, sir.
Open it from your phone. You can read it along with me. It's just for me to position those things. But it's not really work. I don't know what has happened. I'm coming. Please open it from your hand. Read it, please. I will have a better understanding of what you're telling me. Okay, what's the first one? The first transaction.
We are told that on 1st of January,
Okay.
on January 1, a company
January
had
1.
yes,
Okay.
a company had an opening inventory of 100 units
Opening inventory.
of 100 units. We can't see the board.
Okay.
Yes.
Sorry.
We need to see the
Can we see the board now?
not yet.
It's still
The
loading, sir.
Can we see it
has
now?
not opened. Yes, sir.
Yes.
Okay. Okay. On January 1, opening inventory. Okay.
Yes.
What's the units?
100 units, which cost
100
500
units,
naira each.
500 naira each. Automatically, that will give us the value of what? 100 times 500. Is that not so?
Yes, sir.
That's 50,000. That's the value.
Yes,
I
sir.
believe that one has no issue.
No issue, sir.
Okay. The second one,
The
follow
second
it
one,
serially by date.
yes, during the month, it made the following purchases. 5 April.
5 of April, Abi.
Yes, sir.
April 5.
Yes.
What happened?
Purchases.
Purchases. How many units do we purchase?
350 units
350 units. At what price?
at 610 naira, 610 naira each.
610 naira, Abi.
Yes, sir.
610
Each.
which is equals to, what will now be the value? 350 times
213,500.
213,500. I think there is no problem with that one also, Abi.
No problem, sir.
Okay. Now, then the next one, we are now going to the balances. We had the previous, the opening balance with the new stock we are taking in. That will now be what? 100 plus
Plus 350.
350.
450.
We have 450. Is that not so? Then we
Yes,
come
sir.
to the value. We also have the same thing. 50,000 plus 230, 500. What do we have? 360, 260, 263,500. Is that not
Yes,
so?
sir. Yes,
Now,
sir.
you will now determine the price here because you're having two prices. Is it clear? Your
Yes,
simple
sir.
price, average, simple what?
Average.
Average pricing
Average
method.
pricing method is equals to what now?
213,500 plus.
No, not 213. You are going
500.
to add 500 plus, is that
610.
clear? Plus
610.
610
Divided by 2.
divided by 2.
Okay.
What do you have from your own end? Me, I'm having 555.
Yes.
Is that what you also have?
Yes,
Proper?
that
Yes, sir. Yes, sir. Yes, sir.
Catherine, is that what you also have? Did you confirm from your head too?
1,110 naira, sir.
What do you have?
Right.
I said 1,110
Oh, yeah,
naira
divide it by
divided by
2. Divide it by 2 because you have two items. 500
Five.
555. That is the
Yes.
price you are going to be selling now.
So are we supposed to put this column there?
We put it there.
This
That new price.
method.
It's not
So I
compulsory.
need
I'm
it to
just
work
using it. I'm just using it to show you're working, telling you what you are meant to do.
Okay.
Is it clear?
Yes, sir.
Yes, sir.
Okay. The next one.
The next one is in 14 July.
July.
Still purchases.
14.
Oh, I'm sorry, sir.
Wait,
We
there's
closed.
April now.
We've done
9
April
May.
now.
We've done April.
What's
We
the
should
next
go
one?
to May before July.
May.
Okay, May.
May before July. May 9.
May what? May 9.
9.
What do we do?
Sales.
So
Sales.
250 units.
How many units do we sell?
250 units.
250 units.
200 though. 200 units.
Is it
It's
200? Confirm.
50 units.
May 9.
Check it.
Oh, sorry, I'm sorry.
So we are on number 3.
Yeah, sorry.
Okay.
250 units, sir.
250 units. Then that 250 will now be at what price? At
750 naira. Oh, sorry.
at
No,
555.
555.
555.
Okay.
Is it clear?
Okay. Yes, sir.
sir.
Which will now be 250 times 555. That is
138
138,750.
50.
Is it clear?
138. Yes, sir.
Is it clear? We
Yes,
now
sir.
deduct from 450. You will take out the one you have sold out. That's 450 minus 250. You have 200. Is it clear?
It is
Is
clear,
it clear?
Yes, sir.
Yes, sir.
Then you also deduct the value minus the value of what you have sold out. You have what? 124,750. Is it clear?
Yes,
Yes.
sir.
Catherine, is it clear to you too?
It is clear, sir.
Okay. Then you still maintain the new price you have, 555. That's all. Until you have another new price, that price will change. Is it clear?
It is clear, sir.
Okay.
What's the next one?
14, July 14.
July 14. What happened in July 14?
We have 550 units.
Is
It
it
is
purchases or sales?
purchases.
Purchases.
Yes, sir.
How many units?
550 units.
550 units. At what price?
710.
710. Then what would be the value? 5 times 550 times 710. We have 390,500. Is it correct? Is it correct?
Yes, sir.
Yes, sir.
Then we will now add the quantity to quantity. The balance of the old quantity we have is 200 plus the new quantity we just purchased, 555, 550. We have 750. Is it correct?
Yes, sir.
Then this plus this, we have what? 515,250.
So the price is not going to change.
The price will now change now. You can do it cumulatively. How? Your new S, this will now be, you can make it to be 3 prices, no problem, which means you are dividing by 3. And if you are considering the latest 2 prices, you are meant to consider 2. Is it clear?
Are we
What
going
I'm,
to get the same? Are we going to get the same score? Hello.
now, looking at what I'm saying, I'm with you. Looking at what I'm saying, if I want to do it, I can do it this way. 610. I look at it this way. 500 plus 610 plus 710 will now be divided by 3. Do you understand what we have done there?
Yes, sir.
Now, and if it is what you have done before you want to continue, but it's advisable we use what? We use what we call moving averages as we are moving. But if you want to drop one, I'm with you.
Yeah, so I want to get this right. I know you said that we can add 3 together and divide by 3. or add
Yes.
just 2 and divide by 2. But the thing here is that I tried both and I didn't get the same answer. So which
Yes,
one is
You
yes.
can't get
advisable?
this. You can't get the same answer.
Okay, so which one is advisable to use?
You can use cumulative, as in you can use it as moving averages, and you can decide to move for two prices.
I still don't understand.
You don't
It is
understand what I'm
that,
saying? If you look
yeah,
at it indirectly, we don't have the old stock anymore.
okay. That's the
Do you understand what we're
500 naira.
saying? That 500, we don't have that stock anymore. We don't need to consider that one. We can
Mm-hmm.
consider based on the quantity we are having in the store, and we take the price into consideration to get our new price.
Okay.
Is it clear now?
Okay.
If we can look at it, we don't have that, the one of that 500 naira, we don't have that stock anymore. We sold it out. But we are having the one of that 610 and 710. That is why that one is more appropriate. If you don't want to go with what? If you don't want to go with the moving averages, you want to go with what? The latest prices you have to determine your average. You have just only two quantity in the store, the one of 610 and the one of 710. Abi?
Yes.
Now, based on that, we can say that our average that we are looking at is what? 610
And 710.
plus 710. That is the basis of ignoring the first one divided by 2, which we are going to have what? 660. Is it clear?
It is
You know the basis we are using now to go with what we are picked, what we have selected, because we don't have the whole stock anymore. What we have is for 610 and 710. That is why we have selected those two divided by 2, which means our new price is now what? 660.
60.
Is it clear now?
Yes, sir.
What's this one?
Sir?
What's the next one?
The
July
next one is
25.
July 25.
July
25.
25.
Sales.
Sales, Abi?
Yes,
Yes,
sir.
sir.
What do we sell?
We have 250 units
250 units at 610.
at
Which is
660.
660, sorry.
sorry.
Which will be
At
what? Yes, times this. Can you see what we have? 165,000 as the value. Is it clear?
Yes, sir.
Then we go to where we have the quantity we have in the store was 750 minus 250 we have sold. What do we have?
500.
500. That's the
500
remaining
units.
thing we have in the store. Then what will be the value? 515,250 minus
Minus 165.
160. Yes, we have 350, 250. Is it clear?
Yes.
Yes, sir.
We still maintain the whole price 660 until we have another new stock.
Okay.
Any question?
No, sorry.
What's the next one?
October 22nd.
October
22.
22. Purchases or
250
sales?
purchases.
How many units do we purchase?
250 units
We bought 250 units at what price?
at 810 naira.
810.
Yes,
That's
sir.
how much? We have
That's saying
202, 500.
Yes, 202 500.
Then we add it to what we have in the store. We have 500 before plus
Yes.
250. We have 750 again, Abi. Then
Yes.
this is equal to value 350, 250 plus the new value. What we have is 552,750. Then we will determine our what?
Yes, sir.
Our new price.
Our new price.
This is equal to what?
810.
We have 710 now. We don't have 610 anymore. Do you notice that? The quantity of 610 has been sold off.
Okay.
Do you notice?
Yes, sir.
Okay.
Look at it very well. After the time that you have 750, that you have 660, you issue out 250. The whole stock was 350 before. The first one was 100. You sold that one out. Part of the new one that you also have, you sold it out. The balance you were having was 200 as at the time you sold. When you want to sell new one, you sold 250, which means you have sold the whole stock. It is the new stock of what 710 you are having now. 710 plus 810 now. Confirm, check and look at it. Is it very easy now? See now. Look at it. 100, that was the whole stock. Is that not so? You got in another 350. When you bought in 350, you're having 450. Is it clear?
Yes, sir.
Hello?
Hi, sir.
As at the time you have what? You have 100 units plus 350,
Yes,
you have 450.
Making 450.
You issue out 250.
Yes, sir.
Which means that 100 has gone, and 150 out of that 350 has also gone. You have 200 balance of the what? New price of 610.
Yes,
At
sir.
that time, you brought in another one, 550. The total quantity you are having at that time happened to be what? 750.
450.
Out of that 750, you issue out 250 again. You have
Yes.
balance of what? 500. That 500 is relating to 710. You don't have 610
Yes.
stock anymore.
Yes, sir.
Is it clear?
Yes, sir.
Now, to now determine the new price here, will now be
710
710
plus
810
divided by 2.
divided by 2.
760.
You have 760. That 760 will now be the new price. You are going to be moving out your goods now. Is it clear?
Yes, sir.
It's not clear to you, Abi? Hello?
I said it's clear, sir. It's clear.
Okay. What about Jide? Is it clear?
Yes, it's clear. It's clear, sir.
Okay.
Thank you.
Now, what do they say we should do next?
The next one is November 23rd.
November 23rd.
That's sales.
Sales, Abi?
Yes, sir. 250 units.
250
Yes,
will
sir.
now be at 710, and we are moving it out. That will give us what? 250 times 710, 760. What we have is 190. We now say that, okay, the total quantity we have in the store, 750 minus 250 remains 500 we have in the store. Then our value will be 5 minus
190,000.
190,000. We have 3 what? 360, 750. What's the next one?
The
The price still remains the same, yes. Thank you, my dear. We move to the next one. December, Abi?
12, yes, sir.
What do we have? Purchase or sales?
We have sales.
Sales again, okay?
Yes, sir.
How many units?
250 units.
250 units. at 760. What do we have? 190. Then we come here and reduce it. 500 minus 250. We have 250 left, which is equals to this minus 190. Is that what you have?
Yes, sir.
Okay. That's all. What's the next one?
That's the last one.
That's the last one. Then we can go and prepare our accounts.
Statement of profit or loss.
Statement of profit or loss. I can copy this one also. But some things are going to change.
Yes.
Now, the selling price will still remain the same. This one is what? Simple average pricing method that we are using now. The first one was what? First in, first out, which is what? People. Let me indicate that at the front of. Okay. Now, your selling price, it will remain the same. It will not change.
Yes.
Hello?
Yes, sir.
In May, you have 250, Abby?
Yes,
and
sir.
the sales price is at that particular price, what? 750. It still give you this.
Yes, sir.
This one will also occur. 250 times 850 will give you what? This amount. 250 times 960 will give you this. 250 times 1002 will give you this. We add everything together, you have this. Is it clear?
Yes, sir.
Nothing will change there.
Okay.
Your opening inventory still remain the same.
Exactly.
It will not change.
Yes, sir.
Your purchase price still remain the same. It will not change.
Yes, sir.
All these are still intact. Your carriage what? Your work wages and carriage in what will still remain the same. But your closing value will change.
Closing inventory
will change.
So we go back.
We now say that your closing inventory, go to your working. What closing inventory we have? 172, Abi?
Yes.
172, 750. That is what we now come here. We now less it.
Okay.
Is it clear? That's the only thing that we changed here.
Okay.
Because that's the only value that is coming on board.
Then,
is it clear?
It is clear, sir.
Yes, sir.
Our selling price, as the sales is concerned, still remain the same. Nothing will touch that. Our purchases and our opening inventory, nothing will change, because you can't change the amount you purchase at the market. It's still intact. That's why we are recognizing all this. You get it? The wages you pay still remain the same. The carriage invoice still remain the same. But your closing inventory will not be the same thing, because the value you have used will determine what will be the value of your closing inventory. Is it clear?
It is clear, sir.
We now deduct it. We have cost of sales of what? 800 and what? 800 853,750 minus what you have here. What do we now have? We have 86,250. We had our rent, we had our electricity together. We have 145,000 minus this. We have loss of how much? 58,750. Any question?
Okay. So my question is why do we have to add wages and carriage inwards to purchases for us to arrive at the
They are
cost of
direct
this?
expenses.
Okay.
The same question they asked in the last class, in my physical class. Let me take the opportunity to analyze this into you.
Okay.
Is it clear?
Okay.
Let me first ask this. How many of us passed through commercial class when we're in secondary school? Or we have experience with business study?
I did, sir.
Okay. Can you still remember there is a particular topic they call manufacturing account and trading profit and loss account?
Yes,
Can you still remember?
yes, sir. One-sided account.
Yeah. If you can still remember, we have what we call direct expenses.
Yes.
How do we come up with those things? Now, let me come up with a manufacturing account format. Before I will continue, I have no choice. I need to discuss that. Because when you see it in an exam, it will not be new to you. That what are they talking about? Is that clear?
Yes, sir.
Because they can bring it out. There's no doubt about that. You just need to have a better understanding of what it's all about. But hope we can see the board.
Yes, sir.
Now let's go with format of manufacturing account. Manufacturing accounts. That we explain that question that's been asked by Jide. Now, this is it. We have your naira from the lining. Your naira value, you insert it here. Now, this account will not start with trading. You are looking at cost. Because I will also explain what we mean by trading account of those days to bring us to the same page. Now, the first thing you are looking at is this. Opening inventory. Now, in the manufacturing account, Your opening inventory is divided into two in the manufacturing account. You have the one of raw material. Can you still remember? Raw
Yes, sir.
material. That one will be here.
Finished goods.
Another inventory that you normally have is what?
Finished
In the
goods.
manufacturing account.
Finished
Eh?
goods.
Finished goods. Finished.
On the manufacturing accounts, you have work in progress.
Work in progress.
Work in progress.
Raw material, work in progress, and finished goods.
We put it here. We had it together. We have a balance. We move to the next one. We say what? Purchase. Purchases of raw material. Is that not so?
Yes, sir.
We put the figure here. We move to the next one. Carried inward. Carried inward. Of what? Raw material. We put it here. Are we together?
Yes, sir.
We had this together. We have this. If there is a return outward of raw material, we less it. When we less it, we have what we call net purchases of raw material. We add our wages to it, if there is any wages paid, or direct what? Expenses. And alternatively, if you don't want to do it that way, you want to know what is the cost of raw material, you have what? You have. But or not before that, you will need to, before you can get your cost of raw material consumed or cost of raw material available for production. Do you get it? Are you with me?
Yes, sir.
We have what we call cost of raw material available. It's even from cost of raw material consumed for production. Do you get it? Now,
Yes.
we have what we call wages. We have what we call carried outward. But immediately you add your labor and all your direct expenses. Now, let's look at it this way. We have purchased all this. We return what we need to return. Are you with me? But in the process, we need to come up with what? Cost of raw material consumed. Raw material alone. Are you with me? No. Are you with me?
Yes, sir.
Now, this figure we have here, we need to add it to what you have here. when we add it to the old stock that we have, then we have what we call cost of raw material available for production. We are not done yet. Why? We now need to come on board with what is our closing stock at that point. We now say closing stock, closing inventory. That your closing inventory will also be true. We have the one of raw material, and we also have the one of what? We also have what we call work in what? Work in progress. Closing. This one is for closing, while the other one is what? Opening. Is that clear?
Yes, sir.
We add the two of them together and less it. The two will be added together. We now less it from our cost of raw material available. In that situation, we now get what we call cost of raw material consumed. That is cost of raw material consumed. We now add what? Direct expenses. Direct expenses. What are the examples of direct expenses? We have wages. We have lubricant. And others. Put it here. When we add this together, add to what you have here. When we add all this together, then what we are going to get next is called what? It's called what? Prime cost. What do I call it? Prime cost. Which means all what you have added together, you can still remember what I gave you when we're teaching costing and when we're teaching cost estimate. I said when you add material, direct material plus direct labor plus variable expenses or direct expenses, what you get is what? Prime cost. That is where they got it from. Is it clear?
It is clear, sir.
From there, you will now come up with what we call factory overhead. Factory overhead. Call the factory overhead expenses. None of those days. When we don't understand what the system is, this way we normally write it. Then, what are the expenses we're referring to here? We talk of what? Salary for those who are permanent staff in the factory. We put it here. We talk of depreciation of plants. Put it here. Repairs and maintenance. Put it here. Other related expenses. When we add it together, we put the total here. We now add it with the prime cost. What we are going to get is called what? Can you still recollect?
Yes, sir.
What is that? What do we get?
Cost of production.
Production cost. Thank you, my dear. Call it production cost. Or another name is what? Manufacturing cost.
Okay.
Any question?
Not for now.
No, for now. Now, for you to now prepare your trading, that is where you will now see finished goods. Can you still remember your trading account? It does not change, but the name change. It's not that they change the name. I mean, they change the whole thing, but they only change the name. Instead of calling it what? Trading profit and loss account, they are now calling it profit or loss account. Have you done that in your FA?
Yes, sir.
I don't need to dwell more on that because we are going to do it in the future. When we get to plant, what we call it, marginal and absorption costing. Marginal and absorption costing. When we get there, we do it.
Is this in this course, sir?
Yes, in this course. It's a topic on its own. We'll pick up the production cost and put it there.
Okay.
Is it clear? But you can still remember your trading profit and loss, where you have your sales. If they don't call it sales, they call it revenue. You don't call it revenue, they call it turnover. You will let your return inward. Those who you sold goods to, they return back the goods back to you. You will less it from the what? From the revenue you have realized. You have your net revenue, or you call it net sales. We now write up there's what we call cost of sales. What make up your cost of sales? You have your opening inventory plus purchases. But in the manufacturing organization, don't call it purchases again. We now call it plus manufacturing cost or production cost. You will now less your closing inventory. Is it clear?
Yes, sir.
Or you still want me to do the format of that one too?
No, let's just continue, sir. Since you said we can.
Okay. Now, let's go. Now, from here, we can do the third method, which is what? The third method is what? Weighted average. Weighted average method. That's one. This is for question 3 again. Another method. Weighted average method. This is what? Working for weighted average what? Working note for weighted average. I will release you guys anywhere for now, but I'm not sure I want to finish this part. When we are saying next, we are going to another aspect, not this one anymore. Okay. Now, without wasting our time, we just copy and paste. That's easy as that. You understand the logic? I will copy the working note straight. Now let's delete all what we have inside. Plain. Can we see that? Well, review the question with me. Review the question, please. January 1. Hello?
January 1.
January 1, we have 100 units.
Yes, sir.
At what price? 500.
500.
That gives us what?
50,000.
50,000. What happened again? April what?
April 5.
April 5.
Purchases.
Purchases. How many do we purchase? What does our purchase look like?
Units. 350 units.
Eh?
It's 350 units.
350 units at what price?
610.
610. Then that gives us what? 350 times 610. Is it clear?
Yes, sir.
Then we now add the old quantity plus the new quantity. What do we have? 450. We also do the same thing for the value as usual. Is it correct?
Yes, sir.
How do we now get the average what? Weighted average. We will now divide the value by the quantity. You divide the value by the quantity. This will be this 263,500 divided by 400. Is it clear? Divided by 450. We have what? 586. Is it correct?
400 and 450.
450 divided by 450,
Hello.
the quantity you have. Divided by the quantity you have, balance. The balance of your quantity is 450.
Yes, sir.
Value, this one, this is the formula. Weighted average method is equals to value divided by what? Quantity. That's the formula. At any point in time that we are buying another quantity in, we need to get another new price. That's all. Is it clear?
Yes, sir.
Okay. Can we go next? The next one.
Hey, we have May 9.
May 9.
Sales.
Sales. How many units do we sell?
250
Huh?
units.
250 units.
250 units. Yes,
Then we are taking it out at the new price that we have as the weighted average price, 586.
okay.
Is it clear? Then this is equals to 250 times 586. That gives us what?
146.
146.3. Then this will now be quantity minus quantity. We have 200 balance. Then value minus what? Value. What do we have?
Hello, sir.
I'm with you.
So I'm getting 146,500.
What did you get?
146,500.
How come?
I don't know.
250, Abi?
Yes.
Times 586. Times 586. I have what? What I have here is what? 146.3. Maybe, is there any approximation from your end? Do you have decimal from your figure?
Okay.
Hello? 250 times 586. Okay. I can see that. I can see what you are saying. It's as a result of the approximation. He has approximated it to an old number. Do you understand?
That from the way when we got this 586, it was 5 some
I'm coming. He has some points. That is it.
Yes.
That is it. I can understand what you're saying. Let me bring it on board. You will see what we are. Can you see it?
Yeah. Well,
My own figure happens to be a rounded figure. That is the reason why it's everything in that direction. Is it clear?
okay, sir. Yeah, so which of the figures are we now using?
Now, if I want to do it, use this one, 585.56. You will get the same thing that I've done. Use that figure. What do you have?
Okay, 585.56.
Use it.
Okay, I'm getting 585.56. It's still approximating it to 146,390.
390, Abi. Hello, Tokpa. Hello.
Yeah, it's still approximating it to 146,390.
390.
Can you hear me, sir?
Yes, I can hear you.
Yes.
That one is still much more what? Reasonable. Is it clear? That's still reasonable enough.
Getting 390.
Yes, that one is still reasonable enough.
Okay, sir.
It's still okay. Shall we? Now, if you confirm the value, the price will also be the same thing divided by 200. Will also still be the same thing. Is it clear? Dividing the value again by the available quantity. Do you understand? You will still have the same price. You don't need to stress yourself on that.
Okay, sir.
Is catering part of the system? Catering, you are not talking again. Is there any problem?
Yes,
Are we okay?
Yeah.
Okay. The next one. July what?
July 14.
July 14. Is it purchases or sales?
Purchasing.
How many units?
Purchases, yes.
250. Wait, 550.
550.
At what? 710.
Yes, sir.
Am I right?
It's 550, sir.
Yes, sir.
Yes, sir.
Is it correct?
Yes,
Yes,
sir.
sir.
Then we have 200 plus 550. What do we have?
That's 7.
Then our quantity will be what? 117,111 plus 390,500. We have 507 is 11. What do we have next? Then we determine our new price because we bought in another one. We now say 507,611 divided by quantity. What we have now is what? 676.81. That's our new price now. What is the next quantity? Next transaction. Purchase or sales? What date? What date?
July 25.
July 25. Sales, Abi?
Yes, sir.
How many units do we sell?
250.
At what price? The new price, which will be this. Our result will now be 250 times the price. 169,204. What do you have? We have quantity balance of 500. Let's also consider the what? The value minus what? The value. We have 3 something here. Then we also confirm the price, whether it's still the same or not. That is the value divided by the quantity. Divided by quantity. What we have is still the same thing, which is 676.81. What's the next one? October 22, Abi?
Yes, sir.
What do we do? Sales or purchases?
Purchases.
Purchases. How many units do we purchase?
250
we purchase
units.
250. At what price? 810, Abi?
810. So.
Okay. Then this is equal to what? 250 times 810. What do we have? We have 202,500. Is it correct?
Yes, sir.
Then we add it to quantity we have in the store. 500 plus 250.
750.
Then what's the quantity? The whole value plus the new value.
Yes.
We have 540,907. We determine our new price. Our new price will now be that 507 divided by the quantity. What we have is what? 721. Let's confirm whether it has a what? Decimal. It has decimal of what? 721.21. Then that is our new price. Any question?
How did we come about 7? I've been sleeping.
Hey, sorry, my dear. This, for us to get a new price, we divide this the formula. Value divided by quantity. Anytime we bought in another new goods, we determine new price. Value of that price of the quantity, the value of those goods we have divided by the quantity we have. That is, look at what we have done. This divided by the quantity. We have this.
Okay.
Being approximated into what? 721.21.
What is this, sir? Weighted average, sir? Or what?
This weighted average, yes. Let me, thank you.
You see, I'm heading as simple.
That's what I'm saying. Thank you, Jerry, my dear. Weighted average method. That is why I don't want to be missing you in class. You and Gidi and Tope. Oh yeah, let's go. The next one.
Okay. The next one, we have November 23rd.
November 23rd.
Yes, sir.
What do we have? Is it purchases or sales?
We have sales.
Sales. How much do we sell? 250.
250.
Will now be at what price? At 721.21. Then we now multiply this to get the value. 250 times the price. We have the value of 180,302. Then we come here. We minus the old quantity from the new quantity we have sold. That is, we have 750 minus 250. We have 500. Then equals to, what is the value? 540,907 minus
180.
180. That's we have 360,605. Then let's confirm what would be our new price. It should be the same thing with the last one we did. There is no change. Divided by the quantity. Value divided by quantity. We have what? 721. 721.21.
Divided by 721.21. Yes, sir. It's correct. Yes. The next is December 12th.
December 12th now. Top where you see there? Madam here has not slept. To you, we cannot sleep. Oh. Madam Top in the house. Jide.
I'm seeing
December 12th. I will round up the class now because I know you guys are tired because of the pressure at work. I know it's not easy. December 12th, what do we have? 250, Abi?
That's the sales, sir.
Sales, Abi, okay. Sales.
Sales, sir. Sales.
Okay, sales.
250 units.
We usually, yes. At what price? At our old price. We are taking them out. Then this will now be times this times this. We have the same rate. Then here we come here. 500 minus 250. Our balance is 250. Then 360 minus 180. We have 180.30. Is it clear? Then you can confirm the price, whether it's still the same thing or not. That's 180 divided by 250. What do we have? Same amount. That is the value of your stock, and that's the rate you are valuing your stock. It's just telling you the amount you are, the price you are recognizing for the valuation of your stock at that particular point in time. Then you can now go and work on your account that they say you should prepare. You copy this. Again, the only thing you are changing, the only thing you are meant to change is that your inventory. You are not changing anything outside the inventory. All of that still remain the same. Is it clear?
Yes, sir.
Is it clear? Then we just come here. What is our new inventory we have taken on board? 180. Bring it on board. Then minus this. Is it clear?
It is clear.
Any question? Any question?
The closing, have you changed? Okay, you have changed the closing.
I've changed the closing inventory, yes. Compared to what you have here.
Sir.
Okay, what you have here is this. This one is 51. That one is 50. That one was 58.
Okay.
But when you now use last in, first out, the whole thing will change. You will make profit. That is why they ignore what last in, first out. That they always what overstate what profit. Should we work on that one and end the class there, or you want me to take that one to next week? Will I do the last in, first out? Can we still hear
Thursday?
What do you say?
Are we not having class on Thursday?
You will. I don't know whether the other lecture will be available. If not going to be available, I will continue with you by His grace. Will I make it to be Thursday?
I think you will be coming on Thursday.
Okay, no problem. I will make sure. I just pray to God to give me that opportunity to be in class. I should have the energy. The stress will not be too much at work, and I can be able to carry on. Okay, let me. Amen. Let me stop here for today. I will send this one to you, then we can pick it up from there.
Enjoy today. Kindly send the workings, sir.
Okay, I will do it. I will send that now immediately. Thank you. Have a wonderful sleep.
Thank you, sir. You too, sir. I'm grateful, sir.
Bye-bye.
Bye-bye, sir.
Bye-bye.
Bye-bye, sir.
Sorry.